Retirement Recap with Alpha Venture Group. My name is Mark Salamoni, sitting in for Rich Cawthorn. Today's Friday, October 9th. With me today is our Chief Investment Officer, Rob Milas, and one of our consultants, Chris Hines. So, Rob, I'm going to turn it to you first. Looks like we've had actually a pretty positive week for the market, and it's been pretty volatile. So let us in on what's going on.
Yeah, Mark, you're absolutely right. We did end up in equities very positive for the week, up about 3% on the kind of large cap end of things, and actually small caps have outperformed. And again, we talk about this swing between growth and value, and we did see this week actually value outperform. So 1 week does not make a trend, but we'll see. We'll see how it continues to play out over the next few weeks. And during these uncertain times, it's often overlooked that bonds play an important role within a portfolio context. So I wanted to shine a little light on bonds this week and show you what's been happening in the bond market. And so you can see in the two charts below, I've given you the 30-year Treasury bonds as well as the 5-year Treasury bonds to show you what's happening at the long end of the curve on the 30-year side and on the short end of the curve on the 5-year side. And it's just to really show you that, in this market, we've continued to have good liquidity in the bond market. That's really improved and been helped out an awful lot by the Fed. The bond market also provides low-cost borrowing for businesses, and really has provided a lifeline to those companies during this, COVID crisis for them on the revenue side. And then, finally, again, people talk about, it doesn't make sense in a low interest rate environment to own bonds, and it certainly does, as they, really provide an anchor within your portfolio and can cushion that volatility that you were talking about with regard to equities and how much volatility there is right now. So just wanted to shine a light on bonds this week as a way of kind of bringing a different news to the marketplace. And then finally, we also had the famous fly. So I had to include an animal, and that one brought some levity into a very tense market and political environment. So I wanted to shout out to the fly.
Thanks, Rob. Yeah, I was wondering what type of animal you're going to work into the slide this week, and you did not disappoint. And bonds, obviously a pretty important topic, obviously for a lot of investors this year, especially since it's been so volatile. It's important to have a pretty balanced portfolio. So shifting gears, it's Fiduciary Friday. We always try to go over a topic that's important to our plan sponsors and clients. And one in particular, it's kind of getting back to the basics. What you do as far as a committee, how as a plan sponsor you set up the group of folks that is responsible for the retirement plan. And documentation is important. Chris is going to talk on one specific document today. Chris?
Good morning. One of the more common occurrences we run into is a change of personnel within the company as it relates to the retirement plan. So oftentimes a new administrator or investment committee member can find themselves in a position of responsibility without any preparation, frankly. Often that change comes about when someone leaves the company. So the DOL and the IRS do not require that a plan has a charter. It's really seen as a fiduciary best practice. And as you can see in the screen, there are plenty of questions that can be asked and answered. And it has to do with committee selection and the actions and responsibilities they take, to include the frequency that the committee meets. Now, an important consideration when creating a charter is not to make it too granular. So we'll just looking at the frequency of meetings. So if you set up committee meetings in the charter for every month, the committee needs to meet every month, because the IRS considers any documentation that is aligned and set up for governance, it needs to be adhered to. So use it as a practical tool, and I think that's really a guiding principle.
Chris, that's a great point you make on the charter. The charter is an important document. It's also, as you made it clear, you want to keep it pretty basic, because the more granular you get with the detail, the more work you might have to do, and that could be hard to keep up with. And as a result, you could be breaching your own fiduciary responsibility, which you set up. So important to have that, and it's obviously something we work on with our clients quite a bit. So I'll end our presentation today shifting to a study that actually reviewed 1.9 million 401k participants over the years 2010 to 2018. And what that study followed was just participants that were consistently making contributions. And what they found during a period of time, which was pretty volatile, you had a lot of different activity in those markets during that period of time, is those folks that continue to make contributions, even when the market was down, even when the market was up, have tripled their balance since 2010 to now. And that's something that's an important message for everybody. As you continue to work, it gets closer and closer for us all. So continuing to, make contributions into your account is quite something to keep track of. So that's it for this week. We want to wish everyone a great weekend. We look forward to chatting with you next week. Have a great day.